Hey guys, how you doing? This is Entrepreneur Curtis R. Monday, owner of the Curtis R. Monday Insurance Agency. Coming to you right now to share a little insurance tip for you to help you make wise decisions. You know, one of the situations that people always talk about or have questions about has to do with claim filing. This is a common question that I get asked a lot. And with yesterday's storm, I'm pretty sure some of you are having this conversation right now. You're going to be at home, you're going to get a knock on your door, and someone's going to knock on your door and say, hey, you know what, we're in the area and we think that you have damage from the storm. And furthermore, your neighbor up the street has already got their roof fixed and they're with State Farm or Allstate or Geico, whoever, and we can get your roof fixed too. And you're looking at the neighbor's roof and you're thinking like, yeah, I can need a new roof too. And then they'll go and look at your roof and come back and say, yeah, you need a new roof. And you will say, hey, great idea. And then what you'll do is you'll sign a piece of paper. And what you're signing away and what you're actually doing is signing away your ability to handle the claim yourself. What you've just done is empowered this third party to act on your behalf to go ahead and work with your insurance company to file a claim. Now, in the background, you're getting your roof repaired and you think life is hunky-dory. But what they're doing is inflating the cost. So where a normal roof would have cost $10,000 hypothetically, now when they add in their fees for taking the time to doing this, the cost now is $20,000. And so after the roof is fixed, you get a call from your insurance company and they say, hey, you know what, Carolyn, we're getting ready to cancel your policy. You're like, oh my God, why? Why are you canceling my policy? Well, we're canceling your policy because you got a $20,000 claim. And you're like, oh, well, $20,000, you know, why is my claim $20,000? And well, that's because you had no idea of what this other party was doing. When these people come to your home, people, do not allow them to represent you. Do not sign anything. Don't be enticed by the information that they're giving you. If you think you have a claim situation, if you think you have damages to your roof or your property, here is what I want you to do. First, I want you to call your insurance agent. Call a guy like me. Let's talk about it. Let me ask you some questions. Secondly, if we discern that, in fact, that you have to go file a claim, I'm going to instruct you to do the second thing. Go get 3 estimates. Go get 3 different estimates from 3 different contractors, and that helps you get an idea of the damages. That also gives you an idea about pricing. You don't want to just talk to one because they may price gouge you. If you get 2 or 3 estimates, then you're able to compare to see exactly what the costs are. Once we've talked, now you got the estimate, we're going to come back to me, we're going to talk again, and we're going to look at the costs of the estimates, and we're going to compare that to your deductible. If in fact you get estimates back that cost, you know, $1,500 and you got a $1,000 deductible, that means we're only going to pay you $500 in respect to a claim. That is not a good claim to file. Hypothetically though, if that estimates come back at $20,000 or $15,000 and you got a $1,000 deductible, that is a good claim to file. The final piece of this is looking at your claim history. When you talk to me, I'm going to tell you, hey, Mr. Jones, this is your claim history. Now, hear me on this. The average person files a homeowner's related claim once every 11 years, right? And so when you have claim activity that exceeds that average, you become a high risk to the insurance agents, to the insurance company rather. And so when you get ready to file a claim, I'm going to look at your claim history and I'm going to see where that average is at. And if it's in par with it and the numbers work out and the deductible is met and it's a good claim to file, then I'm going to give you my blessing and you file a claim. It's not like I can stop you anyway, but I just want to guide you. But if in fact I see that your averages are more than that 11 years, if I see that you're filing a claim once every 3 years or 2 years, I'm going to tell you that, hey, you can file a claim, but this may not be a good claim for you to file because the insurance company is going to cancel you. And when they cancel you, it's going to be more difficult for you to get insurance over on the general market because now you got claim activity, and you're going to be forced to go through a state-funded plan like the Illinois Fair Plan where your rates are higher. I know what you're thinking. What the hell do I pay insurance for if I can't file claims? And I get that, but unfortunately, insurance doesn't work like that. And anybody you're working with is disingenuous if they don't tell you the truth about how you want to look at your homeowner's insurance policy. You want to look at your homeowner's insurance policy as a major medical health insurance plan. You don't use your major medical health insurance plan to go to the doctor for physicals. You don't get it for that, for the small physicals. You got it for the major hospitalizations that cost thousands of dollars. That is what you use your homeowner's insurance policy for. That is the methodology that I encourage you guys to use when you're evaluating whether or not to file a homeowners related claim. So again, in the storm season, if you got an opportunity to file a claim, then I want you to go ahead and be able to take advantage of the information that I just gave and start from there. If you got other questions, give me a call back at 708-647-1005. Visit www.curtisrmondayinsurance.com for all your questions. God bless. Bye-bye.